What is good, guys? It's Rey-Jay back with another video. And in this one, I want to talk about the overall market and break down something very important involving trading. I'm also going to talk about something that's very relevant to the market right now and your portfolios. I want to give you guys a lesson that's super important when it comes to scaling and understanding the way that you are trading right now. But before I begin these all this information, before I get into any more details, let me just mention a couple of things. Firstly, I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo with the link down below and deposit $100 into the account, you are guaranteed 5 free stocks. If you deposit $1,000, you're guaranteed up to 15 free stocks, and the offer ends very soon. Anyways, guys, when it comes to the market, I did mention to everyone that at that 518 area, we had some tight resistance, and SPY could have gotten some kind of rejection. I did talk about that on Friday, intraday in the morning, and that's what ended up happening right here. So after we got this rejection, I just want to say that SPY has been making some very volatile moves. Got this big push into open on Friday, then we came back down. But now I'm basically implying to all of you that there could be a risk of more downside. I mentioned to you all that SPY could kind of like pop and drop and then continue to sink a little lower. But what I'm trying to get at when saying all of this is that if the market does get this pullback, it could be a little bit easier to trade, at least to some extent, because what a lot of these retail traders oftentimes do is they start to YOLO lots of money into puts, basically. And that's like the most simple way I could put it. And you might be doing this, you might be seeing your portfolio starting to grow like crazy, and it has a big effect on you. But I want to talk about what that effect is and why you need to be very conscious of this. So, what's going on? Let's say you have a portfolio, okay? Your portfolio has $1,000. You have this $1,000 portfolio, and then you start to short SPY. Well, let me go back 1 second actually. Let's say that typically when you're day trading, you make $100 one day, the next day you lose $100, next day you make 200, next day you lose 150, and you're just like a sideways trader, right? I think that this represents a lot of traders out there. Some people even lose a lot of money. But let's just say that you're a sideways trader, you're barely breaking even, you have $1,000 in your portfolio and you're just used to gaining and losing like $100 at a time, sometimes 200, like that, right? So let's just say that's you. What if you started shorting SPY at 518 when I was calling out the resistance, and you suddenly started to buy 0 day to expirations, or you bought them like other expirations that are like a day out or something like that, right? And let's just say all of a sudden your $200 position is up 400 or 500%, and you made insane money. You're up $500 to $1,000 for the day, and you become excited. You become super overconfident, and then what happens is as time goes on, the market maybe pops a bit, you start shorting it again, and then it starts sinking harder again, and then you like triple your whole portfolio, and you make like another $5,000 or something crazy like that, which is 100% possible, by the way, right? Well, you have to remember that when you are scaling up in trading, I'm not against making big gains. That's okay, but you have to control your emotions. Let me explain why. Because if you're day trading with $1,000 in a portfolio, the max you could lose if you are just going long on particular options, right? So you just buy puts, you buy calls. You're not like selling covered calls, selling puts, or doing anything fancy like that. If you're not doing that, if you're just going long on calls, long on puts, that basically means that the max you could lose is what you put in. And if that's the case, you're probably used to not like losing that much money. But when you start trading with a $5,000 portfolio, you could lose, you know, larger sums of money, and that could become like a regular thing. You could be trading with larger sums of money. If you start using $10,000, $15,000, $20,000, it's a bigger sum of money that you're going to be playing around with if you kind of think about it. So the psychological effect of using more money to day trade changes the more money you have. You have to remember this. So when you start getting these big wins, especially if the market starts, going in your favor, if you want to put it that way, and you start, making these crazy moves, you could feel like a king, you could become overconfident, and you could start risking more. And you have to be prepared for that change, that shift, because the more you risk, the more you could lose. Always remember that. And you have to be very patient. So the way to really overcome this is you have to be disciplined. That's the only way to win in this game. There are all these people who make $10,000, $20,000, and they just blow it all. Right? I'm sure that's happened to you, maybe. Who knows? And there's nothing that I'm trying to say to hurt you, to criticize you. I'm just talking about the psychological effect. So to maintain your discipline is simple. I know I keep reiterating this, but let me repeat this. If you're trading with $1,000 a day, let's say you're only using like $150 per trade and you're only doing a couple of trades per day. If you're in a position like that, okay, if you're in a position like that, the way to overcome that is to trade slowly and be picky. Be picky in a way where you look for high quality setups and you prioritize quality over quantity. You can make crazy consistent gains by making one to two very, very high quality trades a day if you're right the majority of the time, right? That's a real possibility. You don't need to make 10, 20 trades a day to be profitable. Let me give you some examples. So here's like a hint for one setup that does look pretty decent. Look at Amazon on the 4 hour time frame. We have a very nice, head and shoulders like structure that has developed on the chart. This is a pretty decent looking setup, but I'm not going to just short this for no reason. I'm going to be watching the price action. Do we get this break of our key support? It's very simple. Once we lose support, that's your trigger. Hey, it's going to be breaking down. We have a potential setup. You take the setup, you manage risks, and you could even take the setup and enter an option like a couple of weeks out, right? And you could still use a very inexpensive amount of money to do that, but you prioritize quality over quantity. This is a nice looking setup. Compare that to something like, I don't know, I think I was looking at Google the other day. Google is not a good example of this. Maybe something like, I'm trying to find like one example of one that's like really choppy, not really giving us that great. AMD is looking a little bit weak. This is not like a good example. I'm trying to find one. I would say I wouldn't use this one. So yeah, sometimes it's a little bit difficult for me to find like the exact setup I'm trying to like explain about. But basically, guys, imagine there's a stock that's just like super sideways, super choppy, not the best of setups. You don't want to be prioritizing it, trading a stock like that. That's sideways. You want to prioritize one that has like a much more clear setup, and those are much better and easier to be trading with instead of wasting time with something that's just not even moving. So I actually didn't find a really good one just yet. That makes up a good example of this. But it's very important to just be careful, anyways. Another example of one could be I'm just looking around. Give me 1 second, guys. I might find one. Maybe the IWM could be another example. Maybe so. If you look at the IWM, the Russell 2000, you could trade this, but intraday, you could scalp this, I would say, but the move is not that big quite yet. It's been very sideways for the last couple of days. So this setup is not looking as high quality as something like Amazon right now. You could still make money off of this, of course, but then you could know what to prioritize based off this. See how this is just like in a very, very tight range, kind of going back and forth a whole lot. I could have found a better example, but I was just kind of looking at these firsthand. This is just an example of a setup that wasn't as good looking as like Amazon's, which clearly has like a better path, at least moving forward. So, in my opinion, I just wanted to let you guys know about this. Look for high quality setups, prioritize trading those. Look at your indicators, which you could be using. You can look at certain EMAs. You could actually come up with them yourselves if you just experiment and backtest. You could even use your different EMAs, like the ones I have over here, even like your own. It's up to you guys. Just experiment and find what works for you. But don't forget that this is a game of psychology, okay? You might start shorting SPY and you might make a lot of money doing it. But if you go from trading with a $1,000 portfolio to like a five to $10,000 portfolio within a couple of weeks, everything could change. Everything will change, and the way you see your portfolio is going to change big time. And this is the reason why it's so hard to really scale when trading, because a lot of people start to chase after those wins and they start to fail at maintaining the proper discipline to be successful. So, what's the solution? Discipline. Set a large group of rules. Okay, know if you're going to use $100, $50, something like that per trade. Are you going to use $200 per trade and commit to it? If you get a really big win, take some time off from the charts. That's what I would recommend, and just know, look, I made a lot of money. My brain is in a different place. Don't go chasing. Always remember you want to hunt for setups and opportunities. Don't chase after them. That's like a very important lesson I learned from a very strong trader. Hunt, do not chase. Do not go chasing over $1,000 gains every single day. If you just barely made your first $500, day trading, it's better to make a consistent $200 a day on most days, or the large majority of days, than to have one day where you suddenly go from making 200 a day to making 5,000. Then you start to lose 4,000 and you're just all over the place. You know what I'm saying? So you want to keep it very, very nice and simple. So please keep this in your mind. If you are shorting the market, if you start making big gains and your portfolio starts increasing like crazy, don't Try not to blow your portfolio. You're playing a video game right now. Your best resource is the money. You want to protect your assets. How do you do that? Manage risks and maintain discipline. I'm going to scream that a million times if I have to. Discipline is key. Be disciplined. Do not let your emotions get the best of you. It sounds trivial. It sounds like, oh, he's repeating himself again. No, don't worry about that. It's very important that you remember this, because this might come back and bite you in the future if you don't take this super, super seriously, because you could lose $10,000, $100,000 if you don't take this the right way. Okay. So remember to be disciplined, and do not forget that if you start taking big wins, your brain is going to change, your mind's going to change. You're going to feel very different psychologically. You may feel like you just conquered the whole world, but in reality, I think you're amazing. You're doing a great job at trying to improve, but don't be too overconfident. If you are playing basketball, if you're playing a sport, being overconfident does not always work in your favor. Prepare for the worst day for every single day when you're trading. Prepare for a crazy market, and be disciplined to the point where you remember to take profits when necessary. All right. That's one of the best lessons I could tell you. Hopefully, you guys got a lot of value out of this video. And I think that me kind of just stepping away from talking too much about the charts, as I've been typically doing, and just talking more about kind of trading in general, just giving you guys some knowledge and advice that could really benefit you. I find videos like this to be very useful. So I hope that this brings some value into your guys' lives. I hope this video was helpful. I hope you guys remember, discipline is key. Do not forget that, especially during a time like this when there's high volatility and it becomes more feasible for retail investors to make more and more money. Okay? Do not forget these lessons. All right. Thank you for listening. Have a great day. Enjoy the rest of your Saturday, and I'll see you guys in the next one. Thank you again, and peace out.